Uh, Good afternoon, viewers, and good afternoon, students. Now I am going to discuss an issue in the context of direct taxation that is called demerger. The business and economic environment of the country has thrown upon the need for rationalization of laws relating to business reorganization for restructuring of production system and better utilization of resources, which have become necessary with a view to enable the Indian industry to rearrange itself to become globally competitive. With this view, point number one, demerger has been made tax neutral and it does not attract any additional tax liability. And point number two, in demerger, tax benefits and concessions available to any undertaking shall be available on its transfer to the resulting company. Now, demerger in relation to a company means the transfer pursuant to a scheme of arrangement under section 232 of the Companies Act 2013 by a demerged company of its one or more undertakings to any resulting company. Now, let me tell you what is the meaning of demerged company. It means the company whose undertaking is transferred pursuant to a demerger to a resulting company. Now, so for the resulting company is concerned, it means one or more companies, including a wholly owned subsidiary thereof, to which the undertaking of the demerged company is transferred in a demerger, and the resulting company, in consideration of such transfer of undertaking, issues shares to the shareholders of the demerged company. It also includes any authority or body or local authority or public sector company or a company established, constituted, or formed as a result of demerger. Now I will be discussing tax incentives to shareholders of demerged company. In this, the first one is period of holding of shares of the resulting company, where shares, that is a capital asset in an Indian company which becomes the property of the assessee in consideration of demerger, there shall be included the period for which the shares in the demerged company were held by the assessee. Point number two, exemption from tax on exchange of shares. The shareholders of the demerged company are not liable to capital gains tax when they are allotted shares by the resulting company in consideration of demerger of the undertaking. Now, let me discuss the tax incentives to demerged company. Plant or machinery transferred on which investment allowance is claimed. If such asset is transferred under a scheme of demerger, the benefit of deduction under section 32 AD shall not be withdrawn. Point number two, exemption from capital gains tax. There shall be no liability for capital gains tax on the transfer of capital assets by the demerged company if the resulting company is an Indian company. Point number three, tax concession to foreign company. There shall be no liability for capital gains tax on transfer of shares of an Indian company by the demerged foreign company to the resulting company if number A, the shareholders holding not less than 3/4 in value of the shares of the demerged foreign company continue to remain shareholders of the resulting foreign company, and number next, such transfer does not attract tax on capital gains in the country in which the demerged foreign company is incorporated. Next, exemption from tax liability on transfer of license to operate telecommunication service, etc. There shall be no tax liability on transfer of right to use spectrum for telecommunication services under section 35 ABA or a license to operate telecommunication services under section 35 ABB or on transfer of a business of prospecting for or extraction or production of petroleum and natural gas under section 42 by the demerged company if the resulting company is an Indian company. Now I'll be discussing tax incentives to resulting company. In this, the point number 1 is capital expenditure for obtaining license to operate telecommunication service, etc. Where in a scheme of demerger, the demerged company sales or transfers the right to use spectrum for telecommunication services or the license to operate telecommunication services to the resulting company. Being an Indian company, the resulting company is entitled to claim deduction in respect of the remaining installment of such capital expenditure. Next, preliminary expenses. When the undertaking of an Indian company which is entitled to deduct such expenses is transferred to another company in a scheme of demerger, the resulting company is entitled to claim deduction in respect of remaining installments of such expenses. And thirdly, expenses for demerger, where an Indian company incurs expenditure wholly and exclusively for the purpose of demerger, it shall be allowed a deduction at the rate 20% of such expenditure for each of 5 successive previous years, beginning with the previous year in which demerger takes place. This is contained under section 35 DD. Point number 4, expenses incurred under voluntary retirement scheme, where the undertaking of an Indian company entitled to deduct such expenses is transferred to another company in a scheme of demerger, the resulting company is entitled to claim deduction in respect of remaining installments of such expenses. Point number 5, expenses on prospecting, etc. of certain minerals, where the undertaking of an Indian company entitled to deduction in respect of expenditure incurred on prospecting for or extraction or production of certain minerals is transferred to another Indian company in a scheme of demerger, the resulting company is entitled to claim deduction in respect of remaining installments of such expenses. Point number 6, expenses on prospecting, etc. of petroleum and natural gas, where in a scheme of demerger, the demerged company sales or transfers the business to the resulting company, being an Indian company, before claiming full deduction in respect of expenditure incurred on prospecting for or extraction or production of petroleum and natural gas, the resulting company is entitled to claim deduction in respect of such expenditure, which is governed under section 42, subsection 2. Point number 7, actual cost of an asset, where in a scheme of demerger, any capital asset is transferred by the demerged company to resulting company, and the resulting company is an Indian company, the actual cost of the transferred capital asset to the resulting company shall be taken to be the same as it would have been if the demerged company has continued to hold the capital asset for the purpose of its own business. However, such actual costs shall not exceed the written down value of such capital asset in the hands of the demerged company. This is as per section 43, subsection 1 and explanation 7a. Point number 8, written down value of the block of assets, where in a previous year any asset forming part of block of asset is transferred by a demerged company to the resulting company, the WDV of the block of assets in the case of resulting company shall be the WDV of transferred assets of the demerged company immediately before the demerger. This is as per explanation 2b of section 43, subsection C. Point number 9, deduction in respect of profits from undertaking. Deduction is allowed from gross total income under section 80 IAB, 80 IB, 80 IC, 80 IE on fulfillment of certain conditions. If the resulting company fulfills those conditions, it is entitled to the deduction for unexpired period specified in the section, resulting in reduction in tax liability. Number 10, where a unit in special economic zone is transferred to another unit in a scheme of demerger, the exemption shall be allowed to the other unit for the unexpired period. This is governed under section 10 subsection A, 10 subsection A 10AA subsection 5, number 11, where in a scheme of demerger, the demerged company transfers its business to the resulting company before the expiry of the option for tonnage tax scheme. The tonnage tax scheme shall apply to the resulting company for the unexpired period if it is a qualifying company, which is given under section 115YZ. Accumulated non-speculative business losses and unabsorbed depreciation in case of demerger. Where there has been a demerger of an undertaking, the accumulated loss and the unabsorbed depreciation directly relatable to the undertaking transferred by the demerged company to the resulting company shall be allowed to be carried forward and set off in the hands of the resulting company. If the accumulated loss or unabsorbed depreciation is not directly relatable to the undertaking, the same will be apportioned between the demerged company and the resulting company in the same proportion in which the value of the assets have been retained and transferred. The central government may notify such conditions as it considers necessary to ensure that demerger is for genuine business purpose. So that is all about so far this video is concerned. Hope this will actually serve your purpose and is a fruitful topic, and basically this is going to help the students will be appearing in the final examination of the professional institutes. Thank you very much.